Sucharita, and hello everyone to our special episode of this video series called 7 InsurTechs. This is our 5th episode, and I have Sucharita, whom I have known for some time. She has spent a lot of time in the financial inclusion space. She was at IFMR Investments, and then she was the CEO of IFMR Holdings. Worked at IFMR Capital. She is recognized as a young world global leader at the World Economic Forum. And currently, she's the co-founder and CEO of this very interesting company called Kaleidofin. And we are going to hear a lot more about the firm itself and especially what they're doing in the insurance space, especially as it relates to microinsurance. So welcome to the show, Sujata.
Thank you so much, Amit, and thanks for the opportunity.
Sure. So I think a good place to start this discussion will be to know a little bit more about Kaleidofin and what is your mission, what is the team. There are a lot of things that you do sort of outside of insurance, and we'll basically spend a lot of time on insurance. But explain to us the company in your own words.
Sure. So Kaleidofin is a neobank. Our mission is really to make customers' real life goals come alive by delivering them appropriate and tailored financial solutions. By financial solutions, we mean combinations of financial products like credit, savings, insurance, investments in the right proportion so that, let's say, our customers, for a lot of whom have, let's say, education of their kids as their life goal, can actually send their kids to college, and it's not so easy. Our focus is the informal customer segment, which is most of India, almost 1 billion Indians, and their families are working in the informal sector, and traditionally products haven't been designed for them. So we really want to bring financial products together in a way that it's much more intuitive for the customer. The customer can relate to it. They know why they're doing what they're doing, and therefore the wide array of financial products that Kaleidofin as a neobank actually provides via its platform.
And in terms of financial services, what is sort of your offering in the market? I know that you talk a lot about microinsurance, but wanted to kind of get into slightly more details.
Yeah. I'll tell you about our solutions approach. The reason why I'm saying the word financial solutions rather than financial products is because product is a manufacturer term and the solution is a customer term.
Yeah.
So what's happening today in the market is that mutual funds sell fund products, NBFCs sell credit products, insurance companies sell insurance policies. But the customer's life is exactly the same. There is one life, there's one goal. And all of these different products, the customer doesn't quite know how to bring them together. There is no access to financial advice beyond the top, let's say, 1 million customers in India. It's only available to the uber rich. And imagine, just to give you an example, imagine you walk into a car showroom and instead of the person showing you a car, he's actually trying to sell you a steering wheel and tires and gears, and you're being asked to put it all together. We're actually doing that for the retail finance customer today. So one of our key financial solutions is called Lakshya. It's a combination. It's aimed at the informal sector customer who is quite fragile in financial health. That's because their cash flows are volatile, both income and expenses. And so Lakshya is a very conservative financial solution that helps our customers reach towards their life goal. Lakshya is made up of 3 components largely. It's made up of one, a regular investment in a liquid fund or a short-term debt fund. The fund gets chosen as per the customer's financial health. And that's done real time using our platform. That's number one. Number two is, insurance or protection to protect that customer against key risks to that goal. So let's say the customer wants to send their daughter to college, but what if something happens to her?
Yeah.
Because she's the main earning member, what will happen? So we actually combine life and accident and disability insurance along with the saving without compromising liquidity or flexibility of the savings for the customer. That's number two. And number three, it also includes a credit line that the customer can use at any point of time, which is secured against the savings, which means that if there are small hiccups, for example, it's June, schools have just opened, you have to buy a bunch of uniforms and stuff like that, there is a sudden blip in cash flow, you can actually use your credit line. The credit line is priced much cheaper than any other source of credit that the customer has. And therefore, the three together, regular investment plus insurance plus this emergency credit line, come together to form Lakshya, which is a financial solution which will, in the most secure way, lead you to your goal. So, that's our philosophy. We want to keep the complexity at the back end and present a clear picture of the customer's goal and that financial solution at the front end. The customer doesn't need to look at 1600 mutual funds, and there is no point showing them that.
Yeah, yeah. I mean, a lot of work has to be done in terms of just the financial education and simplicity with which we can communicate to the customer. So that's a great point. A related question was, and this was a question from Rahul. He's facing some audio difficulties, but what he was asking is that usually in microfinance they club insurance with lending, but you seem to have kind of taken a sort of a route where you're bundling insurance and savings. So what is the inspiration for that? Why are you doing in that way?
Yeah. So, what we found is that customers are fundamentally motivated by their life goals. Right? You don't see very often on Twitter or Facebook somebody saying that, hey, you know what, I just bought an insurance policy, I just got a mutual fund. People don't do that, right? I mean, they said, hey, you know what, my daughter got admission to such and such university. You might find that. So they get excited about their life goals, and you need that motivation. You need a reason to say, why do I need insurance? So now, because our customer conversation in our UI UX always starts with the customer's life goal, that's the hook. So the customer knows that, okay, the reason why I'm buying insurance is because I want to send my daughter to college. It costs 500,000 in 3 years' time. If something happens to me, my daughter still goes to college. So A, it becomes much more motivating for the customer. B, it's a real sale. When you bundle it with credit, very often, whether you like it or not, it's a forced sale. Whereas with savings, fundamentally, because you don't need to do it, right? It's your extra money. It's a very genuine sale. And the customer is voluntarily coming forward to say that I want to save towards my daughter's education. And yes, I want to ensure that journey as well. And the thing is that there is no point selling a savings product when you know that these big roadblocks would make a big difference to that customer's life goal. So it provides that nudge to the customer, and also makes for a much more informed, genuine sale.
Also, I know you care a lot about how fintech companies or tech companies in general sort of report data, and in terms of just the transparency in which they talk about things. For me, I feel comfortable asking you some sort of questions around challenges that you face in the company, and I know you would kind of talk about them as well. I want to talk about like some very simple things, such as because the customers are paying in small regular amounts, sort of how do you manage that? Is there a drop off problem? Customers just sort of escape somewhere in the journey, and how are sort of claims handled? Can you just throw some light on this segment? General perception is that there are a lot of challenges around these things.
No, there are definitely challenges, and the devil lies in the detail
Yeah.
and in the execution. One of the things we've done is that we recognize the fact that customers um, our customer segment, there are two components. There are some who own smartphones, and there are some who own feature phones. And I would say it's sort of 30% smartphones, 70% feature phones, irrespective of actually whether they own smartphones or not. One big recognition is the fact that assistance is required for this customer segment. It's not like just because you have a smartphone, it solves all problems, and suddenly you become the master of your destiny. That's really not the way it works in real life. So we've embraced assistance. That's number one, and that's quite important in the context of some of the questions you're asking. So for example, when we actually onboard customers, we have a program called Kaleido Assist. Uh, Kaleido Assist is now present in about 1,000 pin codes of the country. We are present overall in about 2,500 pin codes of India today, and largely tier 4, 5, 6 locations, which would mean, down from the district level right to the panchayat level. What we have done is really made our own customers our ambassadors. So our customers are largely women, and a lot of them are looking for more ways to be entrepreneurial, especially the more confident ones. Because the best way you can learn is from your friend, right? From someone who you know, from someone who you trust. And therefore, we set up this Kaleido Assist program by identifying the smartest of all our customers, identifying who is entrepreneurial, who's looking for this opportunity, and really making them our brand ambassadors and making them refer other customers, and not just refer, also help other customers know more about financial solutions, know more about how do you upload KYC, suggest leads, and really, become more influential in their own community. So this sort of assistance model is very key for us to solve many of the questions and challenges that you're laying out. So, for example, we have made the claims management process extremely easy for the customer. One, by anticipating what information requirements can be collected well in advance. So number one reason for no claims is that customer doesn't know about insurance, right? They've been sold it, but they've forgotten about it. This is very common, right? For example, you might have a credit card, but you may not know that you have travel insurance, right? You might forget. You probably have accident and health insurance as well, but you probably don't remember, that you have it. And similarly, customers do need to be reminded again and again that, by the way, you do have this insurance, and we do that. So, for example, when COVID happened, we actually did a proactive communications program to make sure that customers know that they are insured. Second, we collect all the documents digitally in advance so that the claims process is easy. Thirdly, we manage the claims process. We don't send them off to the insurance company and say, now you deal with it. Yeah. We manage that whole process. And, sometimes, for example, it's straight through. There is, for example, a death certificate, nominees' bank account details are required. It's really very simple. There are only these two requirements. But sometimes, it does happen that the claim was registered very late because the customer just simply didn't realize at that point that they should be claiming this amount. We will pursue also these cases because these cases have merit. And so we do have a function to assist these customers and to have sort of Kaleido Assist also assist these customers. Because, and especially during this pandemic, I cannot tell you how useful Kaleido Assist has been. Because, these are people literally, who do you meet? You probably meet your neighbors and, people in and around your community, literally. That's how close our circle has become. Mm-hmm. And therefore, having that hyper local presence is super useful. So, This is how we do it. We also, of course, cut out the clutter in terms of exclusions, make the terms and conditions simple. And it's really about if you keep saving towards your goal, this insurance will be valid, and you will be protected against this risk.
Right. When we talk to people in the insurance industry, one of the things that kind of, when they look at an agent-led model, they usually say that there are issues on both sides, right? So there is mis-selling done by the agents, and I have seen that in my case as well. Just in terms of the terms and conditions of what is covered, what is not covered. So this mis-selling by the agents, but also, sometimes there is just non-disclosure of previous medical histories and all of that from the other side. So uh, in your model, how do you kind of take care of these kind of issues?
So one, I think a lot of mis-selling has happened on the ULIP type of policies where customers didn't know about the penalties, they didn't know about the illiquidity, they didn't know about the exclusions of the insurance cover. There were all sorts of problems. So one, we actually avoided, selling customers such products with such complex terms and conditions. And I can tell you that customers are very used to paying penalties for not saving on time. So when we tell our customers there are no penalties, initially the reaction is disbelief. How can it be possible? That's no, there must be a catch. Like, no, there's no catch. There is no penalty. And you ask a customer like us about penalty on savings, you'll be like, why would you have a penalty on not saving on time? But this is very standard because it's standard in the chit fund industry,
Yeah.
standard in LIC policies as well. Right? So, and those are the two products that are ubiquitous in India. So, one, we avoided all such types of products with very complex terms and conditions, and that are just not suitable. You can't tie a customer into a 5-year illiquid product when you know that 6 months later there is going to be a hiccup. We don't know what kind of hiccup, but most likely there is going to be some kind of a hiccup, and it's not not possible to predict that. So therefore liquidity is critical. Secondly, no exclusions at all on previous health conditions. We negotiated that out with the insurance providers, and insurance providers have been very responsive, and I think are recognizing this customer base as one that is significant, and is going to be the future power of India for tomorrow. And thirdly, I think the clubbing together with savings and the life goal really provides the customer that motivation that's required. So those are some of the ways in which we handle some of these naughty issues. It does mean that, for example, we chose group term life and accident insurance to give our customers the most competitive insurance price. It means that revenues will come from other products, but that's fine. I think we want to keep the customer at the center of it, and if the customer trusts us, the business model will make sense.
So are you saying that insurance is like a loss leader while you will make money from other
It's
products?
not a loss leader,
Mhm.
but today we don't make revenues from it either. We do intend to make revenues from it.
Yeah.
On the health insurance, catastrophe insurance side.
Right.
But on life and accident, we just found that the price differential on a group term policy is so huge, and the revenues we earn are so small that when we choose between the relative benefit that the customer gets and the relative revenue that we get, it made no sense. And we are a neobank. We actually have a very wide product offering. So our advantage is that we don't need to make money out of every single product. We need to make money from the customer very clearly, right? So we don't provide anything free, because we don't believe in that model. We don't have cashbacks, nothing like that. So it is more difficult, but these are all then genuine sales.
Right. I was actually not planning to ask this question, but let me actually, this has been sort of, in my mind for a while that people say that financial inclusion in general is a kind of a very hard model to crack from a commercial perspective. So that's why there is Bill and Melinda Gates Foundation, and there is a lot of non-for-profit work which happens in this space. But you seem to be kind of sort of defying that, right? Defying gravity. So how is talk a little bit about that.
Actually, if you look at, traditional uh, finance sector, which by the way is way bigger than digital finance. So you
Yeah.
look at, NBFC MFI size of the industry is 150,000 crores,
Mhm.
right? And are they profitable? They are mega profitable. They are, there are three big companies that have actually listed, in the last 5 years.
Microfinance business, you mean?
Yeah, microfinance companies,
Yep, yep.
almost pure play microfinance companies
Yeah.
that have listed themselves very, very successfully, not even counting the small banks, which are essentially microfinance companies also. At the heart of it, they have microfinance customers.
Yeah.
Uh, and also if you look at the range of sort of VC plus PE money that's come in, I would say that this is actually a customer base who will actually pay for the services because they need the services. This is where the demand is the most, it's clearly felt, and therefore there is a commercial model.
Right.
I think on, I think that the reason why many fintechs have not chosen this customer segment. So I think fintechs have not chosen this customer segment. Traditional finance is all over this space, by the way.
Yeah.
So I think it's, there is a distinction there. So, and if you look at used vehicle market, you look at affordable housing finance market, you look at two-wheeler finance market, very large part of the customer segment comes from the informal sector. So it's not just microfinance as well, pretty widely spread and I would say very established business models. But in fintech, I think one of the challenges is that we want to force fit a smartphone only, self serve only model. Now, if you do that, then there is no model.
Hmm.
So the thing is that there is a certain worldview that a technologist comes with to say that it must fit like that. No, but the real world is not like that. So you know
I guess by asking this question, I wanted the fintech community to hear this from you.
so
And
I'm just
yeah,
saying that
yeah,
embrace what the customer is telling you. The customer is king at the end of the day.
yeah,
If we hear what the customer is telling us, they're saying we will pay for the product, we
yeah,
need the product, we need assistance. That's okay. That's
right,
not so bad. We can provide assistance. Indians have been very good at providing assistance
yeah,
in many shapes and forms.
yeah,
So we just need to, marry assistance and tech, and then you have a business model that actually works.
right,
And these customers you talked about, an earlier question around, drop offs.
yeah,
I would say our customer segment is probably more loyal, more sticky than, customers like you and me who are presented with 20 options and who are constantly getting cashbacks, right? So, I mean, there's a lot of incentive to move around.
right,
And it's not that difficult to move a customer around. But in our customer segment, we actually see attrition rates at lower than 5%. And we do see, because of the assistance as well, and because of the touch with the customer, um, I know touch is not a good word right now, but because of the close,
hmm,
relationship with the customer, we are able to keep our customers
hmm. That,
as well.
that actually reminds me of a thing I wanted to ask you. So, you are dealing with the, bottom of the pyramid customers in rural, semi-urban, urban areas. As somebody who has kind of your entire life's work is in this space, right? So, have you actually gone out and met some of these customers? And is there a special story that you might want to tell our audience?
Yeah. So, I mean, honestly, I'm out in the field all the time, apart from right now. And this, pandemic is brewing, so it's kind of a bit frustrating, but we'll I'm sure we'll get to the end of it. Um, yes, absolutely. I mean, I think one of the big reasons why the work is so rewarding is meeting customers, hearing their voice, and one customer story particularly resonated and stayed in my mind. So this is a customer who's essentially a tailor, and she earns money very, very regularly, right? Because there's school uniforms, there's blouses, there's all sorts of business all the time.
Yeah.
And she was quite successful
Mhm.
in her business. She was sort of, nobody was working for her, but she had a flourishing business. She had significant, daily surpluses, literally. And she would actually, put away something like 50 rupees every day,
Okay.
which was her daily surplus. And if you think about it, 50 rupees every day is about 1500 rupees a month.
Yeah.
And there are no weekends. There are really no Saturdays or Sundays in this segment. Essentially, she was saving with chit fund who would collect money from her daily, and then that chit fund would give her money at the end of the year, which she would then put into an LIC policy, because she had an LIC policy which had an annual premium due. Now, like, this is sort of pretty motivated, right? And she also said that a few times, because she actually puts her money in many chit funds, because she's sort of diversifying her risk. Right?
Very,
She
very.
knows also chit funds are risky. Then
Right.
have you ever lost money? She's saving money for her daughter to become a doctor. That's her dream. And I think she'll get there. And
Fantastic.
have you ever lost money? And she said, yes, of course I've lost money.
Okay.
Yeah, okay. And she's still doing this. So she said that, so I said, why are you, putting money in a chit fund again,
Mhm.
when, uh, you've lost money and you're putting money. And she said, no, but I'm putting money in a variety of chit funds so that, I don't lose all my money. But I said, still, your savings is supposed to be safe. You're not supposed to lose anything at all. But she said, but, if this is my only chance at savings, if I don't do this, then I don't save at all. So I'm
Mhm.
going to take my chances. And because this is my chance of sending my daughter to medical school, and because, it was so heartbreaking, because this was the only mode of saving available to her. And she knew there is a risk. She's very well aware, but she also knows there is nothing else that's available to her. And therefore, she does it even though she knows she may lose money. And the irony of that situation was so huge, and the need is so huge, that, of course, she's now our customer. But there is also a sense of urgency around, there are millions of such stories. And how do we, there's a real sense of urgency around how do we get as many people as possible
Right.
into, safe, regulated financial solutions that actually bring customers closer to their life's dreams, and don't force customers to make such tough choices.
Right.
Right? I mean, this is not a great situation to be in. Yeah. So that story really stayed with me.
Yeah. Fascinating. I mean, I would love to hear more of these stories, but I think this actually is a very good case for a product like yours, right? Where insurance and savings is kind of inbuilt. I wonder why she would not save with a bank or some other financial institution.
Yeah. So the thing is, the chit fund access. The chit fund actually comes to her doorstep.
Okay.
A person comes to her doorstep and collects the 50 rupees every day.
Hmm.
To go to the nearest bank branch, she would probably have to spend 30-40 rupees
Yeah.
to in transport just to do that.
Right.
Um, so, access does make a difference, and that's why we are also betting very hugely on banking correspondent infrastructure,
Yeah.
because I think that's very powerful.
Hmm.
And you've seen that, in this pandemic as well, in making sure that all the direct benefits reach the customers, it's the banking correspondents
Right.
that have done all the heavy lifting, because they are the points, we have only, I think, I may be wrong, but I think ballpark 200,000 bank branches, probably to 300,000 ATMs. That's it. We are 1.3 billion people. So that's very little banking infrastructure.
Right.
Banking correspondents, on the other hand, there are about over a million of them out there. So way more, and it's expanding. And therefore, how can we get, also cash points much closer, just for cash in, cash out? It doesn't need to be very complicated services, but you need to put in cash and take out cash. The use case is very simple.
Right.
So, the other reason is that our customers are not treated very well in big formal financial institutions and are intimidated by staff, etc. So, we can go into it into another day, but it's a very big reason as well.
Right. Right. Maybe the interest rates as well, like they get better actually.
No, not at all. Interest rate is not even an issue. I would say everyone wants to be treated with respect. Everyone wants to be treated like a customer, and you want it to be convenient to you. So,
And they think that the chit fund does not run away with it.
yeah, you take that. If that is the only option
Yeah.
available to you, then you take the risk, right? So, only viable option available to you, and that's what we want to change. That should not be the only viable option.
So there's so much opportunity out there. Like you're saying that there are more than a billion such customers who are kind of left today with some really bad options. And if that is the opportunity, I wonder why. So last year we did the India FinTech report, and we showed how many fintechs out of the 2000 plus in India are focusing on India 1, India 2, and India 3. By the time we reached to India 3, there were only a handful of them left, including one of yours. And I think what we were talking about earlier, right, that could be an episode in itself, that why people are not seeing that opportunity. Why just go after the cookie cutter approach, which is there. But anyways, given this is seven insurtechs, I had one more insurance related question, that have you thought about parametric crop insurance cover or cover for natural catastrophe and other things, and what are your thoughts on that?
So, I think incredibly important products. We are actually working on a parametric natural catastrophe linked insurance. And here, the reason why parametric covers work better is because the cost of assessing whether there has been a natural catastrophe, number one, two, how much damage has been done due to the cyclone or the earthquake or whatever was the natural catastrophe, is very high. So it doesn't make sense to actually assess the damage and then pay the insurance, which is the traditional way in which insurance works. Parametric covers generally say that there are weather monitors. The weather monitor determines whether the natural catastrophe has happened or not. You fix the grade. And if it has happened and you live in XYZ geographical area, then you get 200,000, 300,000. The amount is fixed. So it's much, much easier to administer. And we found, good, at least user interest in this product, both in urban and rural areas. One of the issues that we are dealing with is a little bit of a chicken and egg issue, that because natural catastrophe insurance doesn't exist in India as a product, the portfolio doesn't exist, therefore the pricing is very high. Now, the pricing is so high, the customer won't buy it. But the thing is that the pricing will become lower if there are lots of customers. So it's a little bit of a chicken and egg problem, right? We need insurance companies to say that, look, let me stand behind a lower price and create the market, and we'll get to that lower price. So we are, I won't say that there isn't a challenge in structuring the product. We have a product, but it's too expensive. And therefore we are working with a few development finance institutions to see how can we bridge the gap till scale happens in this product and then prices reduce.
I know that.
Yeah.
So sorry to interrupt. I know that you have worked on the institution, investment side as well. Now, in Europe and other places, there is something called ILS funds, right? And insurance-linked securities, basically. Is that model? Are there companies in that insurance-linked security space in India as well? Have you seen something?
I don't think so. I haven't come across any that are doing this.
Okay.
Um,
Because they are big supporters of, especially parametric insurance and all that. They basically take the risk from you and kind of securitize it at a bigger level, just like how happens in the lending markets.
yeah, no, I don't. No, I'm not aware of any issuance at all in this space,
Okay.
and in fact, we uh, the one of the issues is also that a parametric um, insurance product looks very much like a derivative, and it's quite from, now it's been a while since I looked at this issue, but I know that it was complex to issue security with an embedded derivative
Mm.
in it, where there are all kinds of regulations around, needing to have risk that you're hedging in order to issue the security in the first place. But I don't think there have been any
Yeah,
such.
I
Uh,
haven't seen many players as well.
yeah.
So look, we are actually sort of running out of time, but I had just one last question for you.
So
So the market is huge. You're off to a great start. You guys are doing really good work in a space where it is needed. Where are you currently, and how much of a dent do you believe you can make in the market? And kind of, I'm trying to understand, if the market is like sort of 100, where are you guys? Where is the where are other players combined? And how long we have to go? How many miles more?
miles to go before we sleep. So the market, of course, is huge, right? Amit, we already discussed the size of the
Yeah.
market. Currently we are a drop in the ocean. We have about 1 million users, of which 100,000 are actively buying products. Insurance, savings, credit as well, packaged in the form of solutions. What I'm proud of is our presence. I think we've managed to crack a very wide geographical presence, and it enables us to grow out of hubs. So we are present in 2,400 of 16,000 pin codes in the country, and that gives us a very nice base to grow from. We want to grow around these hubs.
Yeah.
Clearly, given the size of the market, very, very long way to go. But I'm sure, there will be other market entrants as well. It's only a matter of time. We, of course, want to capture the market, and the idea was to be the first mover in this space, know the customer the best, really have access to the most data, therefore be able to provide the best financial solutions as well. But I think we are at a stage of life where more is better, and it would. I'm very hopeful that there will be
Yeah.
more players entering our customer segment, and it will make it even more exciting. So honestly, miles to go, but that's also the excitement of the journey.
Right. Right. So, everybody else who joined us today, you should basically check out Kaleidofin. Their website is kaleidofin.com. You can reach out to Sucharita, I believe, on LinkedIn and as well as Twitter. Thanks so much, Sucharita, for joining you. Thanks for your time today. And I'm sure we'll have more wonderful sessions. And please keep serving this BOP customer base, which is, in my mind, kind of the biggest goal that financial services should have.
Absolutely. Thank you so much for this conversation. It was fun, and also for your good wishes. Wish you the same.
Thank you. Bye bye.
Thanks. Thanks. Bye.